Vikas Khemani is ready. Let me now bring him on board. Vikas Khemani, President and Head of Institutional Equities with Edelweiss Securities. Vikas, good morning. Thank you for joining us. Vikas, why are we falling and how much more do you think we will fall?
So, Nikhil, I think if you see, the recent rally, there were two factors for the rally. One was obviously global liquidity, and second was, I think, domestic action on the reform front, taken by the government. So, I think second part sort of remains intact, or at least, seems to be on track. But I think first part, after the FOMC minutes, I think is coming under question. And I think while they are, I don't think they are sort of going to start the withdrawal process. But I think there has been some question mark which has been put in the minds of investors globally that whether the QE continuing QE will be there or not for next let's say after sort of period of time. And I think that question is going to bother investors from a global liquidity standpoint of view. So, and I think we have one more event in next 1 or 2 weeks where I think Mr. Bernanke will sort of appear in front of congressional committee members for the biannual testimony. And I think there also investor would look to see what's going to sort of come out of what kind of statements he make. So I think getting some sort of direction on that front is going to be critical and important. While I don't think liquidity is going away, they are withdrawing from current program anywhere in the next 3 to 6 months. But what is going to be their broad objective, a broad plan, I think one would want to hear, because the Fed balance sheet has grown almost from $800 billion to $3.5 trillion in last 4 years, and which is unprecedented. They have never had such kind of experience before. So I think that is going to be very, very critical to watch out on that. As far as the domestic issues are concerned, I think we have budget lined up next week, and I think on that front at least things seems to be by and large in place. So I don't think there we will be in for any negative surprise. So that can kind of hold somewhat bottom in the market, somewhat support in the market. Only surprise can come in from the international factor. But if I were to, let us say, my sense on the event, the way it's panning out, I don't think there will be any sort of statement made by the Fed governor also, which can sort of spook markets. I think it will be a smooth transition they will have to sort of charter. So I don't see too much of downside risk from here standpoint from market standpoint of view. But I think incremental liquidity coming into the market will be a big question. We'll have to see how much more liquidity I think can come through to the equity market. We've already received a lot of it, and I think will that kind of, because I think for Indian markets to continue to do well, we will need lots of liquidity coming in the markets, and I think that we'll have to evaluate as we go along.
Because what is it that you're making of the whole power space now? A whole host of projects aggressively getting cleared in the last few days. Does it make sense from an investment perspective, or are you still in the wait and watch mode?
I think we've been saying, power sector is very critical. I think no government would want to get into election mode without, power sector or power crisis getting sorted out. And I think from whatever our interaction with the government and also whatever we read and see the direction from the government, I think they are determined to sort of get this going, because I think we cannot get economic growth back without sorting out the power crisis. So I think the coal pooling issue, SEB, restructuring issues, I think all those issues are in that direction. Certainly, these kind of things do take time, before they percolate down really in terms of earnings, in terms of growth, in terms of, capacity utilization. So I think, which is important from an investor's perspective. So I think from a high beta, high risk, reward perspective, these stocks definitely do, look interesting and look promising. But I must say that they come with their own risk profile. Because
do you think this year's budget will be more like a 100-point Nifty event? On the day we will see a lot of volatility, a lot of price action, but after 24 hours it will be back to square one.
So, as I said, that I think this budget is going to be, at least as it is expected, is going to be a good budget. It might not be a budget which creates a lot of surprise, since the finance minister has already sort of laid out the broad contours of the budget in terms of fiscal and all those things. So I think to that extent expectation is already built in, and if they sort of just get met, and I think they are just budget is on those lines, you might not see a big surprising factor coming in. As far as I think budget market movement is concerned, post budget day, I think there are 3 or 4 events this time around. You have the expiry day on the budget day, you have also the international event in this week. So I think all those things will play out definitely, and also will have an impact other than the budget. So I would say my expectation that budget would be good, and post budget probably we might see some recovery in the market. having seen a sharp correction in the market before budget. So I think in that sense it is set for a good post-budget recovery. But we need to see in context of all other events, whether there is expiry and there are global international events which are going to be very important. So I think we'll have to see in total context.
So Vikas, at a time like this, given the macro environment that we've just talked about as well as the global cues, how are you positioning yourselves when it comes to stocks, and what are names or some stock ideas that you may be bullish or bearish on at this point in time and are recommending to your clients?
See, I think, while we don't change portfolios on a very frequent basis, but I think we've been kind of, from a domestic market standpoint of view, we believe that I think investment cycle has bottomed out. I think interest rates seems to have capped out. So I think if you see both of these things, I think very well augurs well, from a long-term standpoint of view for a few sectors such as banking and financial sector. I think oil and gas sector also looks very, very promising and there's a lot of investment expected that. And I think the price deregulation also I think falls very well for oil and gas sector. I think IT as a sector, given the current account deficit we've been fairly positive on, and I think we think that given the recovery in the global market, as well as I think weak rupee augurs very well for the IT sector. So I think that sector we are fairly positive on. Media, the sector we are fairly positive on again. So you also, these 3-4 sectors we have been kind of advising investors to pick and choose the stocks within those sectors and remain invested. These events will take place, and they will create some amount of uncertainty in the shorter term. But I think if you look at India from a next 12 to 18 months perspective, it looks like that I think these two macro factors of investment cycle bottoming out and interest rates capping out, and I think government wanting to get the economic growth back falls very well in for the investment hypothesis.
So what to your mind could be the Nifty range for this quarter?
I think difficult to put a range, but I don't see too much of, frankly speaking, downside. Maybe you might see another, because it's very difficult to put a downside in terms of technical factors, but I don't see significant downside coming in the market. Maybe another 100-150 points of Nifty, and upside I would say that probably next quarterly results would be a trigger to see what kind of asset quality issues are there in the banking and what kind of progress is made on the economic growth front. So I would say probably it can cap at 6,200 to 6,200 kind of levels. I think probably this is a broad range of 400-500 points. It might be there. I don't see markets coming back significantly. At the same time, I don't see markets falling very sharply.
From now up until the budget though, Vikas, which is just about another 4 trading sessions, is there a chance that the market may fall below the 5,800 mark as well, or do you think we're likely to consolidate within a 5,000 odd point range?
I mean, it's very difficult to, frankly speaking, put a 50, point range and all those things. As I said, that I don't see a significant downside given the fact that we have a budget ahead, and I think markets have already corrected sharply, ahead of budget due to global event. It all needs to, one needs to see what kind of events can pan out. But if, let's say, if I were to say global environment remaining stable, I don't see, markets falling on from here, and then probably you might see some bounce backs coming through. Having said that, I think markets are, seems to be losing out on the incremental liquidity, incremental money flow, which can only come at this point in time from international investors. And I think if that doesn't come, what will drive the market is a question we'll have to see. So I think net, if I were to say, I think I don't see too much downside, but at the same time, from budget perspective, probably you might see some rally coming through in and around budget.
Because many global experts are also of the view that for 2012 Indian markets still did rather well, and for 2013 some degree of mean reversion will catch up. Money came into Indian equities for 2012, but for 2013 the option for global investors are China and Brazil. So do you think we should not take global liquidity for granted?
Absolutely, Nikunj. I think 2012 worked very well, I think, for Indian markets. Global liquidity was there, and most importantly, the supply of Indian paper was almost limited, almost non-existent. Whereas in this year, we have seen, even if assuming that same kind of global liquidity remains for India, we have a significant supply of paper lined up. And if that is the case, then what will drive the markets up? So last year, absence of supply, I think, was one of the key reasons why markets also did very well. And this year, I think, as you rightly pointed out, that I think we cannot take global liquidity for granted. So if global liquidity on the top of slows down, I don't think we will have 2013 year as great as it was in 2012. And also, I think most importantly, we have a political event lined up in terms of, central elections. So I think investor would be definitely wary of, implication and outcome of that, and what kind of, announcement can come from the government ahead of the election before the code of conduct is implemented. Will there be some social schemes getting announced and all? So all those things I think would be at the top of the investor's mind. So I don't think 2013 would be as great year as 2012.
Because if I look at the sum total of Q3 numbers, yes, companies like Infosys, Reliance, to some degree Sun Pharma, some key marquee names have surprised on the upside. But on an aggregate basis, the revenue growth and the PAT growth, which is the profit after tax growth, has disappointed. So do you think it will be revival in earnings at least is 2 or 3 quarters away?
Yes, I think one thing I would believe that I think most of the corporates have put cost under tight control in the recent past, and I think revenue growth was also muted. So I think as the revenue growth comes in, and I think sitting on a tight cost structures, I would say that probably earning cycle seems to have bottomed out. Now I think the only question one needs to see is the pace of the recovery. What kind of pace we will see. So I would say for it to pick up in a meaningful manner, I think it will still take time, probably 2 to 3 quarters. I think it also we need to see macro thing keep macro thing in mind. I think one side we have a fiscal consolidation, which means some of the government money will get pulled out of the economy. At the same time, the investment cycle from the private sector is yet to pick up. So I think this transition of 2 to 3 quarters, I think is going to be very important. For all you might see a very tepid recovery in the economic growth, because I think you are pulling out the fiscal support. At the same time, investment cycle is taking time. It is not going to be very quick and fast. So I think this transition will definitely have impact on the corporate earnings, will have impact on the economic. So I would tend to think that still we will be, for a meaningful recovery to take place, we are I think some time away.
Okay, Vikas, good chatting with you. Appreciate you taking the time out and joining us on the show.